woke up this morning to my accounts being down $32,000. My goodness, ladies and gentlemen, I couldn't even log into my trading platforms because they halted trading on the first half hour of this session. But you better believe when those markets opened up, I was the first one lined up to buy some stocks, which I'm going to reveal to you as we break down my six-figure portfolio today. But I also want to touch base on a few other interesting things, including gold. All of you gold bugs out there like Peter Schiff that were hyping the next recession and crash and gold is the best investment for anything to do with crashes are experiencing the exact opposite today as gold drops with everything else. And I think I have some reasons that might be able to explain that. And I also want to touch base on the hysteria that I think is causing much of this market correction. So ladies, gentlemen, I look so forward to breaking this down for you. So let's jump right into this.
Drop it.
The vast majority of Americans, the risk is very, very low.
Welcome back, my passive income investors alike, to one of the historical moments in this trading session today. And I love saying historical because I mentioned in a past video that CNBC, it is their favorite word to say record, historical, breaking news, guys, when the markets are doing these massive fluctuations that haven't been seen since the 1940s in these kind of volatile moments. But you got to remember, companies are bigger than they have ever been. There are more people trading than there have ever been. So we're going to see bigger and bigger fluctuations as things like this come into fruition. But the problem right now with the hysteria that I think is going on, and I don't want to understate the severity. I have been listening to the news just like everybody else. I see what's going on in Italy. I've been listening to Trump, listening to all this stuff. But we have to remember, during the H1N1, or if I'm saying that backwards, H1N1, is that what it was back then when Obama was president and 60 million Americans became infected with it, causing 20-something thousand deaths, yet nobody really seemed to be too hysterical about it. Meanwhile, we've got just a couple hundred cases amongst Canada, the US, not even a couple hundred in Canada, and everybody is losing their marbles, selling all their investments. The sky is falling. Load the boat with your toilet paper because it's the end of the world, ladies and gentlemen. And that is the kind of feeling and the vibe that I'm getting, causing much of this market sell-off. And I think gold is selling off in the same aspect because it's paper traded. People keep forgetting gold exists more on paper than it does in physical. Gold is probably exposed to ETFs. The ETF market is the largest traded market amongst anything else out there. And when people start selling off out of fear, all of a sudden we get these moments, guys, where gold can be just as affected as anything else. But we are getting to a point, in my opinion, that is reaching absolute insanity. And I'm talking about some specific sectors out there that are getting hit with everything else. Like, there's a lot of bad companies right now that aren't bad, but are going to be affected. We're talking about the airlines, things like Delta, things like Carnival Cruise we're well aware of, but other things that shouldn't be getting nearly affected. And I know we have the oil crisis going on right now as well, causing some of the financials to get hit. But when you look at the oil exposure that some of these banks have, they're very null, like maybe 2 or 3% of their loans are leveraged to oil companies. And yet with this virus and with that oil problem, we're seeing stocks dropping 20, 30, 40%. And I want to touch base on something that I think is really, really interesting. So I wanted to get involved in other businesses or even real estate. But when I looked at the rate of return of, let's say, real estate, it didn't match my portfolio. My portfolio has been giving me up till this point a 20% rate of return. So I have been having a hard time wanting to get involved in any of the other major assets out there because the return just wasn't nearly as good. And it led me to look into online businesses. Many of you know we've been trying to purchase online businesses. We're running a few now. In fact, you can go to thechartmaster.com if you want to track your portfolio the same way I do right here, which if you take a look at my percentages on my portfolio value have been all over the place as the volatility starts moving the different sectors. But the reason I've been looking into online businesses is because they trade anywhere from 3 or 2 to 4 times their earnings. And there is no other investment I've been able to find that offers such a good rate of return that could actually outperform my stock portfolio. But now we are sitting in a time where things like Delta Airlines are literally trading so close to what these online businesses are trading for. In fact, Carnival Cruise right now is trading at multiples that online businesses trade at. And again, online businesses are considered heavily risky. And in this market conditions, I just can't foresee why these companies are trading at the same levels as online businesses are. It's just a weird fact. And it has led me to opening up my doors to many, many companies. This is the first time in a long time I have been comfortable buying stocks, literally almost any stocks I already own, because I'm I'm comfortable with them. I understand their leverage, and I understand they're just not going anywhere. We're seeing kind of this self-fulfilled prophecy going on where all of a sudden fear drove the market down. People started selling out of ETFs, taking the rest of the market with it. Then we have margin calls coming into play. We have short sellers out there coming into play. And all of these people are mixing together, causing massive volatility within this market. And it's just unbelievable, in my opinion, because now we're getting irrational, guys. And I keep saying this, the markets will be more rational than you can remain solvent. And me looking at my accounts down $30,000, it doesn't bother me at all, guys. I think I have fun talking about it, and I'm more excited than ever. I get butterflies in my stomach when periods like this come, because they don't come often, guys. We haven't seen something like this since 2008. But the difference, I got to cross my legs for this, guys. We got to get into a serious topic here. But the difference between this crash and what happened in 08 was in 2008, it was completely fundamental based. What is going on right now has nothing to do with the fundamentals within these companies. Some of them, sure, but we don't know how bad they're going to be hit till first quarterly earnings, because the markets are presumptually pricing in some of the losses that these companies are going to experience in the short term. But over a 5 to 10 year basis, do you think Delta is really going to experience a 40% loss in their earnings in a continuing basis? Probably not. So why is the stock dropping 40%? It's starting to get to the point where I think it is a little bit irrational. I do not touch the airlines. I'm not going to touch Carnival Cruise. But in my opinion, these levels are absolutely absurd. So let's get into my six-figure portfolio and see exactly what is going on here. Starting with my tax-free savings account, which is now well below the $100,000 mark it was at. I mean, this portfolio was sitting at $104,000, $105,000 even as of a few months ago. You can go back and watch those videos. Taking a look at the financials to start it all off. Bank of Nova Scotia, Canadian Imperial Bank just taking a kicking today. We got Northland Power, RioCan coming down drastically. I mean, Northland Power is my only green Canadian stock. Taking a look at my U.S. positions, MO, BTI, these stocks that I think would do well in a recession because people don't want to have to miss out on their addiction. So they're going to go load the boat on everything, including their toilet paper, which was some pretty funny memes that have been going around because, I mean, toilet paper. Anyways, taking a look at Apple and Microsoft taking massive hits today. I couldn't believe Apple sitting in the 250s. Never thought we'd see that again. But heck, you never know, man. The markets can be irrational more than you're going to be solvent. But taking a look at Microsoft paying out some dividends today. As soon as I get my Microsoft dividends in, I'm going to be buying some more stocks within this portfolio. But moving into my RSP account, where I actually purchased some stocks as soon as the markets allowed me to. I spent $200. I went ahead and I bought some Wells Fargo this morning. I only bought 7 shares, but heck, if I can buy anything, I'm going to be buying it. You guys know I'm a perma bull within these markets. But taking a look, guys, Facebook, my goodness, taking a massive hitting. Tesla is still doing well compared to what I thought it would be doing, considering, you know, these highly leveraged, these highly risky companies usually get hit the worst. I mean, take a look at the MJ sector right now, just getting slaughtered. And it is at this point in time that I realize investors out there that never really understood the risk of owning leveraged companies are now experiencing that pain. Anybody holding highly leveraged companies in the oil sector, MJ sector, any sector for that matter, are now getting slaughtered. And luckily, like I said, I think my portfolio is world class, and I truly believe that these companies are going to be able to sustain most market conditions, no matter how bad they are. And I think all of my positions are going to do fine throughout all of this, but those people holding those leveraged companies are playing a gamble right now that those companies are not going to go bankrupt, considering the amount of capital that are losing from their stock prices. Now, taking a look at my Royal Bank account, where I've been most recently purchasing stocks as of this year and the end of last year, is where I'm experiencing most of my capital pains right now. We're seeing a lot of pain. I'm down $200 alone on my Wells Fargo. I am down on MO, and I'm down on BTI. That is not accurate. Oh, this is because it's intraday. I'm down way more than that. Taking a look at the overall, there we go. We're down essentially the combined book value was 3,700, and now we're at 2,800 CAD. So we are seeing a pretty substantial loss in the intraday. Let me rephrase that, is down 10%. So we're down a lot more than that, because I was going to say that doesn't sound right. Overall, that makes more sense. Taking a look, I am down 24% in this portfolio alone. Now, at this point in time, guys, I don't know how else I can say this. I don't want to come across as somebody that is understating the reality, but a lot of these people, a lot of these countries like Italy have to take extreme precautions. And I wouldn't even call these extreme precautions. They're just logical precautions to slow down any major effects this virus is going to cause. But in the global perspective of things, this virus is still affecting a very tiny percentage of people. I know there's a lot of virus experts out there saying that this could affect something like 20 million people at its peak. I'm not not an expert on this. I don't want to comment on it, but I would like to comment on the hysteria that people are going through right now. And you guys need to relax, calm down. Like I said, we're in the eye of the storm here, and we're not going to be coming out on the other end for a little while nonetheless. And the markets are not going to stabilize until we actually see what is happening on their bottom lines. But something tells me when you're looking at bank stocks that are down 30, 40%, that they're not experiencing a 30 or 40% loss in their earnings. So I believe that the markets are going to stabilize after we get through April and we finally see those quarterly reports coming in. I keep stating that. I can't state it anymore, guys. But in the meantime, irrationality is going to take over the market, which in my opinion leads to some pretty big discounts. But overall, guys, I do not know where this goes. And I want you to say the same thing to yourself. We do not know. And we do not make investment decisions on what we do not know. I do not know what's going to happen tomorrow or the next day or the day after that. But what is going on today, I do, however, know. And I will make investment decisions based off the knowledge that is currently available. Now, heaven forbid this becomes a massive problem. It could be a real potential. But if there's something I've learned about life is usually if you think things are really, really, really bad, it's usually is never as bad as you think it is. And usually when you think things are incredible and things are high flying in the markets and everything in general in life are going to be amazing, it's usually not nearly as amazing as you want to make it out to be. Life in and of itself will always kind of find itself going back to the balance. Life likes to remain in this Goldilocks zone where things aren't really great, but they're not really bad. And we're kind of fluctuating between the good and the bad, trying to find that median. And I always want to state this because right now people are completely irrational. People are losing their marbles. People are kind of hunkering down and staying quiet. I'm worried it's going to affect my work. I am a full-time magician. I'm starting to experience job loss due to some of the hysteria, but it makes sense because some of the jobs that were hiring me were international colleges. They don't want to be doing full-on events during the March break when kids are probably going home to see their parents and things of that nature. But I do have other jobs that are more local-based. And here in Toronto, they have said that there is no signs of any local spread. There were people that were living abroad, leading to about 40-something cases, I believe, in Ontario alone. But right now, there is millions and millions of people in Toronto. I think the population of Toronto is a few million people. And to have 40 people affected where we don't see any signs of spread, I'm not going to panic about this. And a lot of my clients told me not to be overly worried about it. But something tells me these shows aren't going to have full turnout. I think there's going to be a lot less people showing up to my businesses. And I'm super glad at this point that I have diversified my income streams because, man, if it wasn't for my dividend income, the fact that we're doing these online businesses, the fact that I'm doing this YouTube channel for you guys, I might be experiencing some severe pains. Like I could honestly see that in a point in time like this, that my work is going to be seeing some losses. And that is kind of scary in my opinion because I don't have insurance. I don't have work hedges. I don't get, job layoff. I don't get any benefits for being self-employed. But it also reminds me of why I go so far out of my way to ensure that I have some kind of other income sources, which by the way, if you guys want to support the channel, head on over to thechartmaster.com. You can actually purchase some of our portfolio trackers, which I believe to be world-renowned portfolio trackers. I'm not going to promote myself too hard here while I pump up my website that we recently launched. But nonetheless, guys, I have to know, what do you think about all of this in the comment section below? Were you holding highly leveraged stocks that are now experiencing extreme pain? I feel bad for you. I mean, are you holding stocks that you think can survive? I'd love to know all of your opinions in that comment section below. Stay cool, stay relaxed, and much of anything else, stay awesome, guys. I look forward to chatting to you tomorrow.